It's time to do business again on Business Incorporated. Here's what we have prepared for you. The spring meeting starts in Washington, D.C. We'll give you details. And in South Africa, retail trade is up. Egypt's green economy is also in focus. Welcome to the program. I'm Ini John Mekwa. Well, let's start doing business from the global space as usual. We start with oil prices. It fell 1% today after the nuclear talks seem to be good, according to the United States. So we see it's a more than 1% drop for Brent at $67.26 a barrel. WTI is also down 1% at $64 a barrel. And of course, the talks with the United States, between United States and Iran, seems to be gaining ground. They've agreed to draw up a framework for potential nuclear deal, according to Iran's foreign minister. And then still in the global space, we see what's happening with metals. We see metals this afternoon surging to a record high, spurred by concerns over global economic growth due to spiraling, of course, the trade war going on. So we see for spot gold is 1.7% up at $3,383.87. US gold is also up a whole 2%, $3,396.10. Spot silver is up 0.3%, $32.88, and platinum is up 0.3%, $969.68 per ounce. Only palladium lost out for this afternoon. It's down 0.3%, $959.43. And yes, the spring meetings start today. In a couple of hours, we would see that. But even before that, cotton raiser had started Thursday, Friday, over the weekend, and the World Bank president was the first to open the cotton.
As we all know, uncertainty and volatility are undoubtedly contributing to a more cautious economic and business environment. I think that's going to affect how governments and businesses make their investment decisions right now. But meanwhile, interestingly, developing economies are playing a far more central role in global trade than they did, say, 2 decades ago. And in that time, the global trade has nearly quadrupled in nominal terms, and the share of the developing countries in that trade has nearly doubled from about 1/5 to almost 2/5. And again, half of their exports now go to other developing countries. At time back in 2000, that was just 1/4. I think this shift brings both an opportunity and exposure. Countries with export-led growth models, particularly those reliant on commodities or manufactured goods, they're much more vulnerable to disruption. But they also have policy levers to help manage the uncertainty and position themselves for a longer-term resilience. So to give you an example, many developing economies still maintain higher tariffs than advanced economies. On the average, several percentage points higher on key imports. I think that creates a real risk of reciprocal tariffs and, most importantly, lost competitiveness. So a broad-based liberalization, not just with favored partners, can help offset these risks and actually expand market access.
Meanwhile, the International Monetary Fund has its eyes on the biggest economies in the world that they believe can change the course of the ongoing trade war. The managing director of the fund, Kristalina Georgieva, who was speaking just before the opening of the meetings on the title Toward a Better, Balanced and More Resilient World Economy, says that there are ongoing talks to correct the threat to global economic stability and prosperity.
All countries can pursue policies for better internal and external balance, supporting collective resilience and well-being. Let me zoom in on the three largest actors. In China, we have been advising on policies to boost chronically low private consumption, a warmer embrace of the natural progression from manufacturing to services as economies developed. In the EU, assertive fiscal expansion by Germany to facilitate defense and infrastructure spending will lift domestic demand, as would EU-wide policies to improve competitiveness by deepening the single market. Europe needs banking union. Last but not least, in the United States, the core macroeconomic policy challenge will be to put federal government debt on a declining path. Achieving this path will require significant reductions to the federal budget deficit, which, among other things, will necessitate elements of spending reform. Lowering federal debt would both strengthen resilience and reduce the current account deficit.
Back here in Nigeria, the Manufacturers Association of Nigeria has shared its finding after a survey on the performance of the sector in the second half of 2024. According to the reports, capacity utilization in the country's manufacturing sector improved marginally to 57% in 2024, and that's up from 55.1% in 2023. A half-on-half analysis showed a 1.2 percentage point increase in the second half of 2024 compared to the first half of the year. However, persistent challenges such as rising energy costs, forex volatility, and high interest rates constrained further growth. Sectoral analysis revealed that non-metallic mineral products, motor vehicle, miscellaneous assembly, and chemical pharmaceutical sectors recorded the highest improvement. 3.2 real and nominal manufacturing production, that was also recorded. Manufacturing output rose sharply by 34.9% to 33.43 trillion naira, primarily due to inflationary pressures. And the Securities and Exchange Commission has cautioned bloggers and influencers against promoting unregistered investment schemes, also known as Ponzi schemes. The warning, which was made in a statement by the Capital Markets Regulator, follows the enactment of the Investments and Securities Act 2025, which has been signed into law by President Bola Tinubu. The SEC Director General Imomotemi Agama, who has been speaking on these provisions, mentioned that the SEC is intensifying its crackdown on Ponzi operators following the collapse of CIVEX. And still on matters arising from the Nigerian scene, we do see that this morning we had a conversation on the Expatriate quota, which is a law that is to be implemented from the 1st of May. The federal government has introduced this new reform that they say is to curb the number of violations within the environment. The Director General of NECA was with me.
We have people that have abused the temporary work permits. Temporary work permits for 3 months. So you have people that have used temporary work permits to be in the country for over 5, 6, 7 years. So every 3 months you renew, every 3 months you renew. So the idea is if you want to stay for 1 year, why not just apply for your SEPA card and stay for 1 year? And if you want to apply, you want to stay for 2, 3 years, why just keep exploiting the temporary work permit? Because with temporary work permit, you don't pay. So you can stay for 3 months, and then after 3 months, you renew your temporary work permit. So the RIGMA rule continues. So somebody that is not qualified can actually be in the country for 10-20 years using the temporary work permit. So he said they are going to also deal with that so that they can monitor who comes in and they can monitor who goes out. And also of interest is the citizenship process. If you desire to be a citizen of the country, the rules tool has changed a bit, the processes has changed, all with the focus of one, protect genuine investors.
Another conversation we had earlier today was the need to bridge the gap between electricity distribution companies and electricity consumers in order to clear the backlog of debts in the country's power sector. This is the perspective of Professor Yemi Oke, Senior Advocate of Nigeria, Professor of Energy and Electricity Law at the University of Lagos. He explains that the move would be very imperative as the two parties remain the weakest links in the nation's electricity market value chain.
We still have a lot of losses, a lot of leakages at the levels of the discos and consumers. Increasingly, we still have huge number of bypass, and the discos needs to be taxed to do maximum recovery of what is given to them. So that was one of the reasons why we had a lot of debt overhang in the power sector. So there is that aspect, and then we still have issues of this metering thing that the federal government is trying to deal with, because Nigerians, in as much as Nigerians are willing to pay for electricity, what we said as experts was that it would be illegal to get Nigerians to pay for electricity not consumed. It will also be wrong, criminal, to consume electricity and not pay. So once that gap is bridged, an average Nigerian can now modulate or regulate their consumption pattern, which is what the metering initiative is trying to achieve. We've had a series of metering initiatives from CAPME to MAP and the rest, but the fact is we still have that gap in there.
Over 45 billion naira has been generated as revenue by the Muritala Mohammed Area Command of Nigerian Customs Service in the first quarter of 2025. The controller of the command, Michael Awe, who was speaking with journalists on the milestone reached by the command within the period under review, explains that when compared with the duties and levies collected in the corresponding period in 2024, it represents a progressive 0.6% increase.
Command collected a total revenue of 45 billion 773 million 368,690 naira only from customs duties and other levies. Again, 45 billion 496 million 389,766 naira only. Collected for the corresponding period in 2024, which shows a revenue increase to the tune of 276 million 978,900 naira and 224 naira, representing 0.61% increase. This impressive performance was made possible through enhanced compliance of our stakeholders, continuous monitoring and enforcement of trade regulations, as well as prompt intervention and blockage of identified loopholes. In terms of anti-smuggling activities, the command made the following seizure during the period under review. All packages of immigration camouflage uniform in rows, 19 packages of two-way Motorola walkie-talkie, as well as 3 packages of Colorado cat leaf. The total duty paid value of this seizure stood at 132,460,135 naira 49 kobo. These seizures were made possible through intelligence sharing, continuous profiling, and vigilance of our officers. Let me reiterate that the command remains unwavering in its commitment to frustrate all forms of illegitimate trades attempted through the Muritala Mohammed Area Command.
And reports say that local investors are beginning to dominate Africa's startup funding scene. I guess that comes as no surprise when you see a country like the United States cutting aid to emerging economies. So how can startups thrive in the midst of this new funding strategy and perspective? We have a senior product manager, Chika Nwokocha, joining us for this. Hi, Chika. Good afternoon.
Hi, good afternoon. Happy to be here.
Good to have you. So, I mean, it's no longer news that there's been pullback in venture capital globally, especially directed towards Africa. What are the new trends? What are the biggest shifts at this time?
Yeah, thank you for having me. So, to be honest, funding is really drying up big time. To be really fair, even strong fintechs like Basopay, they had to shut down. Pillar as well, which had a fast growing savings product, also exited Nigeria. So it's not about the bad ideas, right? So it's just harder now to survive now, especially when the easy money isn't there, to be fair. So in fact, startup funding in Africa has dropped for over 50% to $1.1 billion in 2024, and Nigeria felt that hit hard. So founders are forced to think leaner, spend smarter, and build product that actually pays the bills.
So, what should they be doing? What should startups be doing? What would, attract? We see the locals now getting interested in the funding. So, what should they be doing to get this attention that they need?
Yeah, so honestly, it's all about shifting focus because a lot of B2C fintechs like Bonjour Africa really found it quite tough relying solely on end users. Despite achieving 1 million app downloads, they had to shut down their exchange services in 2023 due to regulatory compliance challenges here and there. So meanwhile, business to business players like Number, formerly Kudi, have been quietly building services for businesses and staying alive. Recently they raised over $30 million in pre-series B round in 2023, and they're now serving over 300,000 businesses, processing $1 billion monthly transactions. So today, reinvention now means focusing on models that actually brings in steady revenue and not just user numbers in general.
Yeah, but I've heard a lot of people say reinventing and refocusing should mean providing solution to local challenges. What about that perspective?
Yeah, so for startups that are actually definitely playing it safe right now, it's almost making founders like actually really sharper, right? So for instance, for Money Point, to be honest, they actually didn't chase the hype. They actually focused on building properly, step by step, and they're now one of the most profitable fintechs in Africa. So in 2024, they raised over $410 million, hitting $1 billion valuation, and they're now processing 800 million transactions monthly, right? So now it's not all about building problems, right? It's about building the real problems in the background. And those kind of models actually keeping them really strong, right? So that's the kind of focused innovation that is working right now. So here, it's not about growing fast enough. It's all about growing right.
What about alternatives? Um, well, they say necessity is the mother of invention. Perhaps this
Yeah.
crunch could create some alternative funding avenues.
Oh, yes. So founders are now leaning into angel investors, grants, customers' revenue to stay afloat. So a recent report revealed that over 43% of Nigerian startups are receiving funding from angel investors, including family and friends, over the past decade, surpassing those 24% that's been funded by venture capitals. Take for instance, Fair Money, for instance, the have grown their gross revenue by 62% to 121.9 billion in 2024, and they rely heavily on customer revenue. So it's all about bringing those revenue-based vehicle financing and expanding it to 16 global markets. So these examples are showing that raising money isn't just always the win. It's all about staying alive as well.
So does this threaten the sustainability of startups on the continent?
Oh yes, it does. It does. Honestly, because I've seen a lot of teams that have come together. After the shutdown. Ex-lesser pay engineers are working on new things. Founders from companies like AO as well. They're sharing spaces. sharing knowledge. In Lagos and Abuja, more founders as well are collaborating instead of competing, because right now it's all about survival and shared wins, and not egocentric, to be fair.
Yeah, well, some things have to bring down that ego, yeah. So,
Yeah.
but this isn't supposed to discourage new intakes. But what should they look out for if an individual was
Yeah.
thinking of just coming to the scene and missed this crunch?
It's quite simple, just solve real problems. Don't wait for venture capital validation. Just focus on your users. Build that trust. Charge early if you can. Look at companies like Paystack, Core, that are building real businesses, they are solving real pain points, and they are scaling naturally as well. So for Paystack, in July 2024, they processed trillion in transactions in a single month. So that's a testament to steady and focused growth. So this is not the time for noise. This is time to build value and let that speak louder than any pitch deck you have.
All right, I hear you build value. And if I don't hear any, I hear that. Chika Nwokocha, Senior Products Manager, thank you so much for your time.
Thank you.
Let's take a break. When we come back, we'll head to, well, the markets are closed mostly, but we do have market gist for you. Anita will come with that. After the break, stay with us. Welcome back. Still watching Business Incorporated here on Channels Television. We head to the markets now with Anita Edet with a quiet market, because I see close from Thursday. Been a while since we went to the market.
Yes, last week, and as we speak now, the Easter break is still being observed across major global stock markets, not just on the African continent. And we saw that at some point that our stock market, it's a drop below the 103, the 104,000 points. But for the close of Thursday's trading session, was able to make a slight comeback. So. But this is just in the midst of many macroeconomic factors, which is one of the driving points there for the market, and not to mention the global tariff uncertainty, which is eating into some of these companies. So, but I spoke with one of the stockbrokers, and he said, okay, that they're expecting the market to be mixed. All right, so let's talk more about this market, which we've just been having a little bit of banter there. 0.38%. This is what we saw the market close for the second week of April, and the market is still going to be in a cautious terrain as we speak. But for the South African stock market, it was a pullback for the close of Thursday's trading session, 0.23%. And the other two markets on the African continent, we see the EGX 30 as well as the Nairobi Stock Exchange making, this is just for last week, just a quick review for last week. Okay, so now let's talk about what to expect on the Nigeria's markets here. We start first with the resumption, it was from Friday into the weekend, and today the market is still on holiday, but tomorrow it will be resuming for the third week of April, after that long Easter break there, which is tomorrow. So we're expecting that the market will come back, all the markets, both the fixed income market, the pension fund market, as well as the equities market, the money market, all the markets will be resuming. So we'll keep an eye on how the market will open for tomorrow, just less than 24 hours from now. And on the next stop here, we see the Debt Management Office is expected to release the second quarter bond issuance calendar, which will give a sense of direction into the government's borrowing path. If the government is going to take the borrowing on the domestic market, or will they go international, especially where we see that the international market the markets are being either under boil. You see, at some point you see the market in the red, and it's not been too much of a good respite for the market. But so far we keep an eye on that second quarter bond issuance calendar, which we'll get to talk with one of our analysts for today. And at the same time, after the market resumes on Tuesday, on Wednesday, we'll be expecting that the central bank will be offering about 400 billion worth of treasury bills at the primary market auction just about 2 days from now. That's on Wednesday, the 23rd. So we keep eyes out for that. And what else are the things to expect for the money market? We're expecting that more than 145 billion naira, almost 146 billion naira worth of inflows from FGM bond coupon disbursement will boost system liquidity within the money market. We saw the overnight rate being a little bit higher there. At the same time, for the fixed income market, to expect that there will be increased demand for T-bills, which you just mentioned there about the 400 billion naira worth of treasury bills auction due to be carried out on Wednesday. And then a moderation in the bonds yield, that's for the bond space. For the equities market, which we earlier mentioned, the cautious sentiment is expected to continue. Last week we saw that the market made, it was in the bearish territory for a second time, and that is expected to still continue. But anything can happen for the market, for the domestic stock market. So that's a quick snapshot of what to expect from the domestic stock market and the financial market as well. So now let's talk more about the fixed income market. And we have today Oludayo Oladele, Head of Treasury Sales at Polaris Bank. We have much questions for him on this holiday. The market is actually on holiday, but he's taken out some of his time to talk more about this market. So let's bring him in. Oludayo Oladele, thank you for joining us on the show.
Thank you very much.
Okay. So now, my first question will go to the second quarter bond issuance calendar. Bond, of course, we know what bond is a debt instrument. So, and we know that government gets some of this funding either from Euro bonds, from the fixed income market, the treasury bills, and so many other other instruments. So now, tell us, what do you expect from this second quarter bond auction calendar by the Debt Management Office?
Okay. Thank you very much. We expect that when that is released, we expect moderation in government borrowing is expected to continue to remain moderate. However, with the reduction in oil prices and which is currently sub-budget level, government may have to borrow more locally and internationally. So we expect them to still borrow between 150 to 200 billion per maturities, and we expect to see 3 maturities coming up for the next quarter as well.
Okay, so now let's move a little bit away from the bonds market and into the, well, this is just about a month from now. We'll be having that, the Central Bank's Monetary Policy Committee meeting, and will be coming after we saw inflation pick up to about 24.23%, up from 23.18% after it was rebased. And we'll be having the April inflation report just before that the May 8th Central Bank MPC meeting. So what would be the expectation if the interest rate of the inflation rate climbs higher?
Okay, for the opinion is that it's too early to call, right? The earlier rebasing did not seem to achieve a month-on-month decline. We still saw a 105 basis point increase, which is a significant gap, considering the effort that have been put in place to ensure that there is reduction in that. And that reduction is equally supposed to continue to moderate the monetary policy rates and all the in terms of the NPR and the other figures, the asymmetry window and the likes. So we expect typically that it's still going to be a watch. The government will still definitely watch. So it's either it is moderated or there is slight increase in MPC. It's either is maintained or there is a slight increase in the NPR rates for the coming window. But yet, the direction will be very clear once the April CPI data are released into the market.
Okay, so now let's talk about the 400 billion worth of treasury bills, which the DMO will be looking at, or the central bank at the DMO will be expected to carry out. What are the expectations for this upcoming treasury bills primary market auction?
Okay, the market haven't established an earlier resistance, leading to the fact that we saw that there was the last stop rate was at 19.63%, and the total offer was 800 million, but they sold 400 million. Now, considering the fact that the 400 billion, considering the fact that this coming auction is going to be around 400 million up for sale as well, and we expect them to fill the subscription, we expect rates to be in the same region as it stopped the last time. Also, in anticipation for the upcoming inflation data, people would definitely moderately go for the auction to see that they are not stuck with bad instruments.
Okay, Okay, so now that takes me to my final question with you, which has to do with Forex, which is a major part of Nigeria's economy. Now, what with the current FX pressure, we see the central bank has been carrying out lots of intervention in a bid to stabilize the naira, and we've been seeing the impact of this Donald Trump's tariff having effect. Everyone's flying to safety. So, what would be the expectation for Nigeria's forex market? We know our forex reserve has dwindled further to about $37.82 billion, and the forex market is not doing all that well. So, what will be the expectation? What's your short to medium term expectation for the forex market?
For the forex market, the short to medium term expectation is to continue to moderate rates downwards. We had seen earlier in the months that the rates had skyrocketed, had depreciated rapidly, and but the buffer that has been created from CBN increase in foreign reserve up to a three-year high in the earlier part of April has enabled them to have buffer to intervene moderately in the market to increase supply, which saw that a week-on-week close of the FX shows a slight appreciation in the FX rate. So that is expected to continue in the coming weeks, and with improved supply and the lowering of the demand, which is because a lot of FPIs have actually been in the market in the last couple of days, and they have actually had their needs met. So we expect that there is a decline in how much is going to be leaving the country. And if that happens, and with normal supply in the market and with CBN continuous intervention periodically, also as we have seen in the last trading weeks, would expect that rate to gradually moderate downwards also, and it would not be as high and see the ceiling that we had seen in previous weeks. But we expect that those will go down in the short and the medium term to come. That's the expectations for now.
Okay, Oludayo, I think we'll leave it there, and of course keep our expectations for the markets opening, for the financial markets opening, as well as how it will end the week, the third trading week of April. Thank you so much for your view on our show.
Thank you very much.
Also, Oludayo Oladile, Head of Treasury Sales at Polaris Bank. Give us details for the fixed income markets. Okay, let's talk about the Middle Eastern markets. We see the Middle Eastern markets here. It's mostly negative sentiments there, except for the Dubai FM there, both of them on the United Arab Emirates. A red there for the Abu Dhabi and a green for the Dubai. But some of the information that we have here is that for the UAE, we recorded a total of more than $1.424 trillion worth of foreign trades in 2024 alone, and this is according to the World Bank's World Trade Organization's Outlook and Statistics report, the latest one for that country. At the same time, for the Dubai, we see that the real estate sector recorded about $4.98 billion worth of transactions just last week, and this was carried out in 4,662 sales just last week. And still with the Abu Dhabi, you see that the country is eyeing about $24.54 billion worth of tourism boost by 2030. So that's it for the UAE markets. That's the Abu Dhabi and the Dubai FM. And now for the other two markets, the Saudi Arabia and the Egypt 30, we see both of them in the red, 0.57% and 0.28%. For the Qatari Stock Exchange, 10,106.72, while for the Saudi Stock Exchange, the Tadawul, 11,567.76. Talking about the Saudi Arabia there, we see that the country has launched a new tourist VAT refund scheme, which is expected to be particularly for the Gulf Cooperation Council, the GCC countries, where they will be treated as tourists from outside the GCC until the implementation of the electronic service law. So that's it for the markets that we track on the Middle East. And from the Middle East, we fly over to the United States stock futures there. Well, the markets are actually on holiday, but the futures ahead of the opening bell, all in the red. And this is no thanks to the tepid, there's little progress being made in the global trade talks, which they're trying to see what ways they can come out to make things softer for stocks listed on the S&P 500, on the NASDAQ, and the Dow Jones Industrial Averages. So, but so far, not much progress has been made, and it doesn't seem to be any progress in sight. So, but what are the markets expecting later this week? Earnings, it's another week of earnings. So more than 100 companies on the S&P 500 list. We'll be expecting to release some reports in the coming days, and these companies would include the Magnificent Seven. That's we have the Alphabet, the Teslas, aerospace giant. That's the Boeing. So most of them will be releasing the first quarter results, which the markets will be looking forward to. So that's a snapshot for the markets on the United States. And for the Asian markets, Japan, if we can have it there, Japan was the only loser there, down 1.30%. Japanese market has not been doing too good all the way from February. We saw that market, it had risen to about some 39,000 points, but it is down, receding further, 34,279.92. But for the other markets on the Asian region, we see them in the green. Shanghai 0.45%, Nifty 50 1.15%. And talking about the Nifty 50 there, we have it that the Prime Minister of India is playing host to U.S. Vice President J.D. Vance as he begins a 4-day visit to the country. We have it that in India, the U.S. is India's largest trading partner, and the two are finding a bilateral bilateral trade, which is expected to reach about $129 billion. It reached that amount last year, but is expected to climb higher as they seek a way to meander around the Donald Trump's tariff, which has riveted many markets around the world. So that's a wrap for the market for Monday.
Yeah, and I wonder if you know that J.D. Vance's wife is Indian, so they're taking advantage of that relationship, the in-laws, and trying to put that into trade relationship.
Talk about putting, I don't know what to call it, whether it's a financial market romance, or I don't know.
All right, Anita, thank you so much. Well, let's head to Europe now. It's a quiet day as much of the continent celebrates Easter, but not only this weekend, today, it's also a public holiday there. While many are happy about an extra day off work, there are talks about getting rid of those extra holidays. Lars, I wonder if you're part of this.
Thanks for having me. Indeed, there is a discussion going on over these federal holidays, and it couldn't be more complicated. As a matter of fact, when the new parliament got together for the first time recently, one of Germany's most prominent political leaders told his lawmaker colleagues that it would be nice to have 2 more federal holidays on the annual calendar: International Women's Day in March, as well as May 8th to commemorate the end of World War II. Now, both are certainly valid thoughts, but many economists are saying that Germany should indeed not have more, but fewer holidays. And one of the most prominent economists, who also has the government's ear, actually says that at least 1 holiday has to go to help the economy overcome its ongoing crisis. And that makes sense for sure. Germany has been in a recession for 2 years, and growth expectations for this year are also weak. So one way to strengthen the economy and get out of this misery is likely more work. Now, it's hard to put into numbers how much of an effect this would have, but some economists are saying it would increase the gross domestic product by 8.6 billion euros.
Well, last, Nigeria too has this conversation, but how are people reacting to this suggestion of taking away some of the holidays?
Yeah, that's where you run into some problems, of course, because as much as economists are pretty much in agreement over how good it would be for the economy and the country by extension if everyone worked a bit more, obviously not everybody wants to work a bit more. In fact, over the years, work days have become shorter, the work week has become shorter, with some companies offering 4-day work weeks as employees demand more time off and a better work-life balance. So it's no surprise that unions are up in arms over these suggestions. They are insisting that federal holidays are not only an integral part of a country's culture, but that they have the purpose for workers to catch a break, and that the right amount of off time makes workers actually more happy and, in the end, more productive. However, working a bit more makes you also more productive, I guess. Not all employees will hate this either. After all, more work means more pay as well. But at this early point in the debate, there are definitely loud voices on both sides.
Yeah, I wonder where you think the government is tilting to last.
Well, coalition talks have ended, and I have not seen anything concrete in those papers, so I don't think we'll be seeing much action here right now. And there is likely one problem, too, in terms of getting any major change done here. The leading party in our new government is the conservative Christian Democrats, and let me repeat this, it's the Christian Democrats. Now, they are unlikely to take one of the religious holidays off the schedule, even though Germany is generally becoming more secular, and most people don't really care that much for religion anymore. Now, to make sure a holiday like today, Easter Monday, would likely not be touched anyway. But what about Ascension Day or Pentecost? Most people can't even say what they're really celebrating on these days. But aside from religion, you have the second party in the governing coalition. That's the Social Democrats, and they are the old-school workers' party. I can't imagine them taking a holiday off either if workers end up being the ones shouldering the load. So it might be worth looking at alternatives, and that includes offering workers more money to work more if they choose to, by, for example, getting extra pay for taking only 4 or 5 weeks off instead of the regular 6 weeks that most people take off, or by making it more attractive for older employees to remain in the workforce. So there's definitely a lot of options out there.
Yeah, Lars, I mean, very interesting picture you painted there, both for the Christian and the social, the parties that make up the government. I wonder what will happen, but thank you so much for bringing such an interesting conversation on today. Let's head to Africa now. South Africa's retail sector showed strong performance in February, with sales climbing by 3.9% year-on-year, and this is according to latest data from Statistics South Africa. Retail trade sales, measured in real terms at constant 2019 prices, saw a solid increase. The biggest drivers behind the growth were retailers in textiles, clothing, footwear, and leather goods, which surged by 15.7% and added 2.3 percentage points to the overall figure.
Retailers in household goods and the miscellaneous group referred to as all other retailers also registered growth. On the downside, hardware, paint and glass, food and beverages, and pharmaceuticals and medical goods recorded weaker sales in February. On a month-on-month basis, seasonally adjusted retail trade sales decreased by 1.3% in February 2025 compared with January 2025. This followed an increase of 0.7% in January.
In Zimbabwe, the Investment and Development Agency, ZIDA, has reported a 663.1% increase to 4.74 billion in their investment. This jump, they say, is fast because of faster digital processing and increased investor confidence in the country. The increase is from 622.18 million recorded in the same period last year. Zeda has invested heavily in its DIY licensing portal, which allows investors to apply for investment licenses effortlessly through a user-friendly interface, allowing the applicant to manage their investment from anywhere and at any time. And Egypt is set to boost its green economy efforts with the launch of the second phase of a financing program backed by the European Bank for Reconstruction and Development, EBRD. The new phase targets $175.5 million to support private sector projects focused on sustainability. The program aims to foster innovation and sustainable practices in Egypt's private sector, with a particular focus on supporting small and medium-sized enterprises as well as micro-businesses. Minister Al-Mashat emphasizes that the program's success in its first phase has laid a strong foundation for the next stage, which will expand funding to projects aimed at mitigating climate change, enhancing resource efficiency, and adopting circular economic practices. Still in Egypt, the country plans to increase public investment in education to 61 billion Egyptian pounds in the 2025-2026 fiscal year, and that's up from 56 billion pounds this year. The planned 9% increase in funding comes amid a broader national strategy to overhaul the country's education sector, expand access, and enhance workforce readiness. The move will also support Egypt's middle class and accelerate digital transformation in schools. The new investment plan includes building additional classrooms, upgrading existing schools, especially in underserved areas, and reducing classroom overcrowding. It also aims to expand access to competitive, high-quality schools catering to the middle class. In East Africa, the Central Bank of Kenya has raised 36.36 billion Kenyan shillings in its latest treasury bills auction, signaling a surge in investor appetite for long-term government securities. The auction was marked by overwhelming interest in the 364-day treasury bill, which attracted 27.87 billion Kenyan shillings in bids of 278.7%. The strong demand reflects rising investor confidence in the country's financial instruments, particularly longer-term options that offer greater returns and security. Despite the high demand, the interest rate on the 364-day paper declined slightly to 10.01%, and that's down from 10.23% in the previous auction. This trend was mirrored across all tenors, with the 182-day bill settling at 8.76% and the 91-day bill at 8.47%. Now let's see what's happening in the crypto space. That's the market that does not sleep. If we could have the price to see what the market is looking like. So it's green. At some point, I did see that Bitcoin got up to $87,000. Was a steady movement almost all through the weekend or the holiday, but we do not know if it has come to stay. You know, we have to be cautious with our expectations, and it's up in 24 hours, almost 3%, 2.99%. That's for Bitcoin. Ethereum is also up, sustaining at the gains that we saw even on Friday. So it's 1,623.90. It's also gained almost 3% right there. XRP, BNB, Solana, most of them we see they are up this afternoon. So can we say that there's been steady or the dark days over for crypto, as we see a kind of stability? Now it seems obvious China is creating its new path of trade, and so is the United States, as Anita did talk about, the vice president of the US in India. They seem to be boosting, their relationship there. And remember, China has also warned countries who may be, embracing the US against them, that you could also have some consequences. We know the president of China has been going around a lot of the Asian states, countries, to try to revitalize some maybe not so active relationship. But let's find out why this market is green at this time, and perhaps if it's sustainable. We have Rume now. Hi, Rume. Good afternoon. Happy holidays to you.
Good afternoon, Ini. Nice to be here.
Great. So why is the market green? Do you know?
Exactly. The market is green because the space expect Donald Trump, the U.S. president, to fire the Fed chair, Jerome Powell. Thinking that Jerome Powell is the real problem as against what is happening in the global economy, most especially with the tariff. Someone has to just bear the burn of the brunt of the whole thing. The tariff is the problem, but it's looking like it's shifting to Jerome Powell, more or less like what happened to Gary Gensler the other time. And at the end of the day, figure out that immediately Gary Gensler was kicked out president himself launched the meme coin, and as well as his wife and a couple of other persons. So the market is excited, thinking that Joe Paul is a problem, but not knowing that it's a problem that is going to be for a while now. I'm not optimistic for the short term, but long term, very, very optimistic, because the tariff challenges, it's not something that just come in a month or two, it's gone. It's going to linger for a while, because we're already seeing reprisal from China. The Chinese government actually saying that they're not going to buy aircraft from the US, and also it's figured out today that also LNG not from the US anymore, and a couple of other things. And China is even advising some other countries not to give in to the sanctions of the United States. So all of these are what is playing out, and it also has its own role to play in the crypto market. So let's see what happens. The fact that I made that statement in the weekend, the market is happy today, but I think this is just a dead cat bounce, right? That's what we call it in the crypto space. It's not sustainable. We might start seeing some downside. A couple of markets are closed because of the holiday, or maybe when it resumes tomorrow, it's going to play in.
Yeah, Ruben, that was getting excited that perhaps the new normal has set in and investors are settling into that, because while President Trump was awaiting negotiation from China, obviously said they are not interested in that, but we see both countries creating new paths and partners, of trade. So perhaps that could give a bit of reprieve to the markets, all markets and investors, saying that perhaps there's a new normal. Can we just move on with this new normal? That should bring a bit of certainty, isn't it?
So the crypto market is forward thinking, and in issues like this, it's already looking at what is going to happen. A couple of persons have the mindset that the US is going to cut rates. Some persons are actually speculating about 3 cuts this year, which I don't think is possible. You see what is happening in Europe. I think the truth is that the US economy is not at the best now, which also affects the world economy. And how it plays into crypto, funny enough, is the fact that we now have institutional investors, Wall Street guys buying into crypto, hedge fund managers getting into crypto. So, for example, we're now longer seeing the usual idea of ETFs flows. That's one of my telltale signals, right? If ETFs are not coming the way they ought to, it only means that the market is actually waiting. So we're in a wait and see period exactly in the market, and no one wants to try and see what comes out, because we saw what happened in a few weeks and days past, and I don't think it's going to get better. This is just a short term. Peradventure, we might just see the market go to like a 91, but I think what is going to happen subsequently is a downside and not an upward trend. But at the end of the whole front and back with this tariff thing, when a lot of alignment and realignment, like you said, have actually happened, we're going to see the US dollar actually is losing value about today somewhat because of the tension, all of these that is going on. So maybe a couple of persons could see the Bitcoin as an alternative. So we heard last week that some countries are already pricing certain transactions in Bitcoin. Russia or China doing all of that. It only suggests that an attention is coming to the market. That could also give us a breather as time goes on.
All right, Rume, but it does seem like more investors are going the way of gold. We see gold surging. Well, thank you so much, Rume, for that.
Thank you very much, Amy. It's my pleasure.
All right, yeah. So that's it on the program. Thank you so much for being a part of Business Incorporated. I won't see you again today, because the markets are not open, but I'll see you tomorrow. So do enjoy the rest of your holiday, and should I use the couple of hours left to rest very well, because the hustle begins again tomorrow. John McQuarrie, see you tomorrow. Bye-bye.